Hi guys, welcome back to my channel. In today's video, I'm going to go through with you guys how to start day trading. So I've been getting this question a lot over the past several months, and when you first start, I know it can be a bit overwhelming because there's so much information out there and there's so many resources, and sometimes you just don't know where to start. So I decided to make this video for you guys just to break down all of the steps that you would potentially need to take in order to become a day trader, and where to start, from brokers to accounts to a watch list, etc., etc. So I'm gonna break all of that down with you guys, and yeah, let's go ahead and get started. All right guys, here we go. Day trading 101, how to start your day trading journey. Step one is to find a broker. So the broker that I currently use is TD Ameritrade, and I trade off of their Thinkorswim platform. I think that their platform is very easy to read, nice UI design, very simplified. It does have a lot of ins and outs, but the great thing about TD is that they offer so many videos that teach you how to go through the platform, that teach you how to put in orders, how to, add indicators, all of that. And I think it's so great because they have so many educational videos on the platform itself. So I think it's really great for beginners, and you can learn a lot just through signing up with them. So great platform. The only issue that I've ever had with them is that sometimes the fills, when you execute a trade, it can be a little bit delayed, and with scalping that does become an issue sometimes, but it doesn't happen so often that I potentially would want to switch to a different broker. So that's the one that I use. So if you don't want to use TD Ameritrade, there are other obviously brokers out there. There's tons of brokers that you could look through. Some of the steps that you want to take is, one, you want to check for the commissions and fees, if they charge any commissions, if they charge any fees, and compare and contrast between the different brokers, because obviously you don't want to invest your whole account into commissions and fees, especially if you're scalping. You want to find the lowest or zero commission and the lowest fees that you could potentially get, because you're putting in so many orders throughout the day as a scalper. You want to kind of cut out all of those extra fees. Another thing that I would suggest is to make sure that they offer some type of paper trading or on demand. It's a great way to kind of practice reading the charts and executing trades, and kind of getting a feel and familiarizing yourself with the platform, the way to put in a trade, get out of a trade, and before you just jump into trading. Because sometimes, and I've seen this with newer traders, where they'll open a broker account or with anybody, whatever, Robinhood, let's say, and they just fund their account and they start trading, and then all of a sudden they don't know how to close a trade, they don't know how to get out of the trade, they don't know how to execute a trade. So you need to make sure that all of that has been established prior to, obviously putting in real money and executing on a trade. So find a broker that offers paper trading on their platform. It's really helpful. Also want to make sure that the specific broker is available in your country. Sometimes for specific brokers are only available to U.S. citizens. So for example, Charles Schwab, Robinhood, and E-Trade, I believe, are all just for U.S. citizens, and then Interactive Brokers, Lightspeed are for international individuals, non-U.S. citizens as well. So make sure that whatever broker that you're going to utilize, it is available for you in your country. Part to finding a broker is figuring out what kind of account that you're going to open. So there's two different types of accounts that you can open for day trading purposes. You have your margin account and you have a cash account. So I'm going to go through the differences between the two of them and what I personally think is the best for a newer trader, and then obviously you guys are free to decide whatever account you think would fit best into your trading purposes. So some questions you want to ask yourself prior to figuring out what account you want to open is, one, what kind of trading style are you going to utilize? Day trading, scalping, long-term investment. How much are you going to fund your account? That has to do with what type of potentially account you should open. So make sure you have those kind of established prior to picking what account. And so just going through it. So with a cash account, how a cash account works is you obviously can put however much you want in the account. You can take as many day trades as you want. The thing is with a cash account is you can only trade up to the cash that you have in that account. For example, if you have a $5,000 account, and you use 3,000 in one trade. For the rest of the day, you only have 2,000 left to trade with, and so on and so forth until you run out of cash. Usually when you hear people saying I'm out of buying power, it means they've run out of cash for the day and they have to wait till the next day for their funds to settle. So with a cash account, it takes one full day for the funds to settle. So like I said, if you use 3,000 for one trade, you have $2,000 left. The next day, your account will be back to that 5,000 or more if you took a profit, or less if you took a loss on that trade that you took. But you will only be able to trade up to the cash that you have in the account. Now, for a margin account, it's a couple different things. So for a margin account, you fall under the PDT rule. What the PDT rule means is that if you have an account, if you have a margin account with less than $25,000 in it, you can only take up to 3 day trades in 5 business days, okay? So with a margin account, if you have less than 25,000, you're only allowed to take 3 day trades in a 5 day business period. You cannot take more than 3 day trades in a 5 day business period. Obviously, if you have more than $25,000 in the account, you don't fall under the PDT rule. So if you have a margin account and it's over $25,000, you can take unlimited day trades, so you don't fall under that PDT rule. Also, you can trade with leverage at that point. So you can borrow funds from your broker in order to invest in a certain stock or take a trade, etc., etc. So if you have over a $25,000 account as a margin account, you get unlimited day trades and you can trade with leverage. Under $25,000, you are limited to the 3 day trades maximum per 5 business days. Personally, I think a cash account is more convenient for newer traders. One, I think a cash account teaches you patience and discipline because you're restricted to the amount of cash that you have in that account. Obviously, if you have a margin account less than $25,000, you are under the PDT rule, so it does kind of restrict you. But with a cash account, I think you're able to, personally think you're able to scalp a little bit more, take some day trades, take some swings. It gives you more flexibility, even though you're limited to the amount in your account. You can still position size properly, and if you have like $1,000 account, you can break that account into 4 different trades and take on $250 trades per day. So I think a cash account is the best way to start off when you first start day trading. The second step to take to start day trading is you want to take the time to learn. So I see a lot of people try to skip this step, and in the long run, this is going to hurt you. I've seen it so many times. I've experienced it myself. If you don't put in the time to learn the material, to learn what you're doing, to learn what you see on the charts, you are not going to progress. Or if you do progress, it's going to take you a way longer time frame than if you were to just get over the learning process in the beginning of your journey. And then obviously, as we continue as traders in your trading journey, even myself, you continuously learn different things. So some of the steps that personally I would take if I was a newer trader, or how I've gone about the learning process, is because there's a lot of information out there, and again, it could be really overwhelming. You don't know what to read, where to look, and you don't know who's really giving you valuable information and who isn't. So one biggest thing I suggest is reading books. I will link down below some of my favorite books, whether they're options books, psychology books, day trading, scalping, whatever the case may be. I'll list my favorite ones down below and the ones that have helped me the most. You want to watch videos. YouTube has a lot of videos. You just want to kind of filter out the nonsense from the valuable information. And then, like I said, if you have a certain broker, some of the brokers provide a lot of educational videos as well. Like I said, TD Ameritrade does provide a lot of educational videos that you could potentially learn from. It's like taking an educational course on there. So definitely look into that. And then you also want to stay up to date with the overall market news, overall global news. What is the market sentiment? Sometimes you hear on TV, they say the Dow is down, or market is down. Whatever they say, you need to make sure that you understand what's going on in the market overall and why it's happening. That all goes into the learning process and kind of understanding the market sentiment, because some days, when market sentiment is negative, the entire market is falling, regardless of whether you know, Tesla had good news or Apple had good news. It doesn't matter. Sometimes the entire market follows a certain sentiment. And two of the parts that come into the learning process is your technical analysis side and then your fundamental analysis. Sometimes certain traders separate the two, and you know, they're either just fundamental analysis traders or they're just technical traders. Me personally, I use both. I use technical analysis and I also use fundamental analysis in my personal strategy. So the difference between the two is technical analysis is your charts, your indicators, your price action. That is all you're seeing on the chart itself. Those are your technicals. Whatever indicators you use, volume, you know, moving averages, VWAP, level 2, those are all of your technical indicators that you utilize when you're trading. On the opposite side, you have your fundamental analysis. This is, you know, looking into the stock itself, looking into the company. What is the value of the company? Is it undervalued, overvalued? Obviously, I think personally, fundamental analysis does take more time and more research in order to understand. Obviously, you're going to have to research the company, research what analysts are saying about it, how it's been doing, overall earnings for the past couple quarters. Have they been beating? Have they been losing? This gives you kind of an understanding of where the stock falls in the market. Also, you want to look at things like patents, business models, competitive advantage. You know, if it's a certain stock in a certain sector, you want to see how the sector is doing or how other stocks in that sector is doing, and where does your stock fall in that rank. So pay attention to both sides. I think fundamental analysis, a lot of people tend to kind of overlook, and they don't understand that it's a very, very valuable part of a trading strategy if you utilize it correctly and if you actually put in the time to learn and to be able to understand a stock's fundamentals. So the next step is to set trading goals. So some questions that you should ask yourself prior to starting your trading journey is, you know, is this going to be a passive thing? Is it just going to be passive income, a side little hustle that you do? Or are you going to be more active in it? How active are you going to be? How much time do you have to put into, you know, screen time, looking at the charts, studying? How much time do you have to in the day to actually watch the market and see what it's doing and be able to take trades? I know a lot of people have, you know, day jobs. They have 9-to-5 jobs, and the market's open from 9 a.m. to 9:30 to 4 p.m. So you need to figure out your schedule, figure out your lifestyle, and how you can implement day trading into it. Because yes, certain aspects of day trading require more screen time and require you to actually sit in front of your computer and watch the market and see what it's doing. So analyze your life, see, you know, how busy you are, where you can fit day trading in, and then plan out your week. Especially if you have a 9-to-5 job, the best way to go about this is to plan out your week, figure out the days where you have the least amount of conference calls, the least amount of work to do, or, you know, push all of your work towards the beginning of the week, trade towards the end, or vice versa. Whatever you can potentially do, you need to make sure that you plan it out prior to actually starting your journey. Another part to this is that your trading goals should not be profit related. I know when a lot of people first start, they're like, okay, I have this $5,000 account. My goal is to grow it to 10,000, grow it to 100,000, grow it to 50,000, whatever your goal is. That is not what I mean when I say set trading goals. It shouldn't be profit related at all. The profit and the money behind trading will come in the long run. Trust me, if you take the right steps first, if you figure out all of the nitty gritty first, the profit will eventually come 100%. What you should focus on though is, you know, how well is your strategy working? If you have started day trading, you know, what in your strategy is working and what isn't. You need to be able to smooth out all of those inconsistencies to be able to make sure that your strategy fits not only your lifestyle, but it is working for you. Because sometimes I feel like people just are consistent with a strategy, and they are consistently losing with a strategy, and they don't try to change it. They don't try to figure out what they need to do in order to fix it, or what are they doing wrong in order to implement a different part of their strategy, or remove something and add something different. You need to this goes into also spending the time to review your trades if you are trading, journaling them, figuring out what you're doing wrong, what part of your strategy isn't working for you, what can you implement in place of that, and how you can move forward with that. So all of that is really important to it. Also, instead of paying attention to your profit margin, you need to pay attention to kind of your win-loss ratio. How many, over a week of trading, how many of your trades, what was your percentage win versus your percentage loss? That's what you need to pay attention to, because that's going to show you whether overall you're taking good trades or overall you're taking bad trades, because you could potentially have one bad day and 4 good days, 3 bad days, but your 2 good days could make up for those days. So you kind of just need to pay attention to all of that, and that goes in with reviewing your trades and journaling and making sure that you are updating your strategy and learning as you go along, because no strategy is perfect. The market is always changing, and we need to be, as traders, we need to be able to adapt to that changing market, because if you're stagnant, if you're stuck in your ways, you're not going to progress as a trader. All right, so the next step is deciding on a trading style. So there's a lot of different trading styles that you could potentially implement and utilize. Personally, I'm a scalper. Sometimes I day trade as well. I don't usually swing trade. It's very rare that I swing trade, but I do scalp. Mostly 90% of my trades are scalp, and then the rest of the 10% is a mix of day trades and swing trades. Now, I'm going to break down the 3 different kinds, and then you guys can figure out, what would work best for your lifestyle. So the first one is scalping. So when you're scalping, what you're usually doing is you're holding the trade for a couple of seconds to a few minutes. So you enter a trade and you close the trade within a couple of minutes. Maximum, personally, in my opinion, a scalp is no more than a 10-minute trade. So yeah, you're only holding it for a few minutes and you're in and out of the trade. Now, with scalping, you're pretty much just profiting off of small price changes. So usually with scalping, people tend to either size up in their trades more than they would than if you were to take a day trading and a swing trade. Obviously, if I were to day trade something, I'm not going to put in as many contracts as if I was to scalp, because with scalping, there's less risk to adverse events. You're not holding as long. So if, for example, some news came out, you're less likely to be affected by that news, because you're not holding the stock for too long of a period of time. It's a very small time frame that you're holding it, so less risk to adverse events in the market. Now, for day trading, usually you're holding the stock a little over 10 minutes, anywhere to the end of the day. So with day trading a stock, you're opening and closing that trade within the same day. As long as the trade is open and closed within the same day, it's considered a day trade. Usually with day trading, you're looking for bigger percentage moves. You do get bigger percentage moves, especially if the stock is on a certain trend throughout the day. If the stock is not on a certain trend, sometimes you're not getting those bigger price moves, but you are looking for obviously a bigger price move than if you were to scalp the stock. The third type of trading style that you could potentially implement is swing trading. So swing trading, you're holding for a few days to several weeks. This you can use, obviously you need to use fundamental and technical analysis. I do see swing traders mostly using fundamental analysis, just if they see certain news come out on the stock or the sector or overall market news, they'll tend to hold the stock a little bit longer. In recent market conditions, personally, I don't like to hold the stock for more than a day, 2 days if I'm swinging. I don't usually swing like weeks out in advance or anything like that, but that is something you could potentially do. Now, the 5th step to starting your day trading journey is you want to build a watch list. So a watch list, I think a lot of people tend to overlook their watch list, and they don't really pay attention to the fact that it's very valuable to your trading strategy if you pick the right stocks. And regardless of what type of style you have, you need to have a watch list on hand. So how I would go about building a watch list, you want to keep it simple. There are a lot of stocks out there that you could potentially trade. a lot. So you want to make sure that your watch list is not overwhelming. It's very small, especially if you're a newer trader. I don't recommend watching more than 2 stocks, 2 to 3 stocks max per day. When you're first starting out, if you watch any more than that, it can get a bit overwhelming, and you'll miss trades, or you'll start to overtrade. The next thing on this is you want to stick to favorites. So obviously, stocks that people tend to trade more often, that have the most volume, that have the most liquidity in the market, stocks like Apple, Amazon, Facebook, there's a reason people like to trade them. There's a reason they have volume on it. They're easier to trade, easier to read, and 90%, not 90% of the time, but most of the time, they have solid price direction and price action throughout the day, less volatility in the market, and easier to read, in my personal opinion. So you want to stick to the favorites, and then you want to keep your watch list updated. So as I've grown as a trader over the past 2 years, my watch list has grown and shrunk depending on what stocks I like, what the market looks like, what sectors are doing well, etc., etc. I add and remove stocks on like a quarterly basis, I would say. So if I've seen that I haven't traded a stock for a while, I'll remove it from my watch list. If I see that, I like a certain company, or it's an up and coming company, or I traded it once or twice in the quarter and I liked it, I'll add that to my watch list, my main watch list. And then again, stay up to date with news on the sector, on the company, on the market, whatever the case you may be. So some of the stocks on my watch list are listed here. I'm not going to go through all of them, and I do want to say that I'm sure there's some of these stocks don't fall under these categories. Like I don't know if Tesla's an industrial or not. It's an automobile company, but it was the only one I had, so I wasn't going to make a separate column for it. So I know it's not to a T accurate, so don't kill me for it. But right now, this is the watch list that I have. It's pretty up to date. Now, when I say watch list, I don't mean I watch all of these stocks every single day. This is my main watch list, and what I'll do is in the morning, if you guys have watched my morning routine video, I'll go through my news source outlets and look at which one of these stocks has news behind it, what's trending, what is up pre-market, down pre-market, what sector is moving, etc., etc. And then from there, I'll decide on about 8 stocks that I watch per day. So I don't try to watch more than 8 stocks per day. Sometimes I'll miss something, and that's fine. I'm past that FOMO period in my trading journey, but this is my main watch list. I look at news in the morning, and then I'll pick around 8 stocks usually per day to watch, depending on the news. So I always find stocks that have a catalyst behind it. That's how I personally like to trade. First comes the catalyst to me, and then whatever price action throughout the day or the previous day that it had, I'll utilize as well. But I personally always want to trade a stock, especially if I'm scalping or day trading. If I'm a scalper and day trading, so I always want a stock that have a catalyst, because that catalyst is potentially going to move that stock in a certain trend throughout the day, or it's going to give it a higher probability to move past certain support and resistance zones that I've set for it. Now, the sixth step is to practice. So in the beginning of the video, I stated that it's really good to find a broker that has paper trading or an on-demand feature. What the on-demand feature does is allows you to go back in time to any period of the stock and watch what happened throughout the day. So you can actually watch the stock move throughout the day, say like a year ago on a certain date. Thinkorswim has that feature. They also have a paper trading feature. So that's a really good thing to have. Also, it'll help, like I said, familiarize yourself with executing and exiting trades. That's a really important thing to grasp. And then obviously it'll help you with charting, help you with understanding how the market moves, just watching the market. And then, just kind of actually executing and seeing how it works. I think all of that's really important. So, the seventh and final step is trading. So no one can, force you to get into trading. You can learn everything, and I've seen people take educational courses and things like that, and they still don't start their journey, or they're scared, or whatever the case may be, and they see other people making lots of money and they're struggling. And I just want to let you guys know that it's not an easy journey. Like, some people make it look easy, and sometimes I'm guilty of that and I make it look easy to you guys, but it's really not. There are days where, I struggle. I have really high anxiety and frustration in the market, and it's hard to trade some days, and it takes a toll on you mentally, emotionally, and it is not an easy job. Personally, in my opinion, I think it takes a certain type of individual to be able to trade. You need the discipline, you need the persistence, because there's going to be a lot of failures, especially in the beginning part of your journey. As long as you get past that and move forward and push forward, you'll become a successful day trader. And I also obviously implement all of the steps that I gave you before, and try to learn as much as you can, and familiarize yourself with key components to the overall market. You'll do well as a trader, but it all comes with taking that leap, actually starting, and not giving up. Everyone's journey is different. Some people get over the learning curve really easily. It doesn't take them that long to get over it, and they just catch on just like this. And there are other people, just like myself, that take a while to learn, and they need more time to learn and gain understanding, and that's fine. It's not like, it's not a competition. It's not a race. The market has been here for 100 years. It'll continue to be here for the next 100 years. And I think that's what a lot of people need to understand, that, your journey is your journey. It's not anyone else's journey. And yeah, just don't give up and move forward. All right, guys, so that's it for this week's video. Thank you so much for watching. If you liked the video, go ahead and give it a thumbs up, and don't forget to subscribe to my page. If you have any questions regarding the video, go ahead and comment down below, or shoot me a DM on Instagram, and I'll be sure to respond. And I'll see you guys in next week's video. Bye.